Welcome back to the MoneyWise Investor Channel. Today we're diving into a topic that can change your financial future: investing. Whether you have just $100, $1,000, or even $10,000, we are here to show you how to put that money to work for you. So grab a notepad and let's get started. First things first, why should you even consider investing? The answer is simple: compound interest. This magical concept can turn a small amount of money into a sizable nest egg over time. Imagine your money growing without you lifting a finger. For those who start early and stay consistent, investing is a pathway to financial freedom. Even a little can go a long way. Let's break it down into three scenarios: $100, $1,000, and $10,000. Each amount has its unique advantages and strategies, so stay tuned. Let's kick things off with $100. Now I know what you're thinking, what can I even do with that? Well, more than you might expect. More than you might expect. Number 1. High-interest savings account. First, consider putting that money into a high-interest savings account. While it may not seem exciting, accounts like those from Ally or Marcus offer interest rates around 3 to 4%. While it won't make you rich overnight, your money will earn interest while you think about your next move. Number 2. Fractional shares. Next up, you can buy fractional shares of popular stocks. Let's say you're interested in a company like Apple or Amazon, but their stocks are priced over $100. With platforms like Robinhood or Stash, you can invest in just a fraction of a share. For example, if Apple stock is at $150, you can invest $100 to own a portion of that share, giving you a taste of the stock market without needing a lot of capital. Number 3. Robo-advisors. You might also want to explore robo-advisors like Betterment or Wealthfront. They manage your investments based on your financial goals and risk tolerance. By investing that $100, you could gain exposure to a diversified portfolio of stocks and bonds with minimal effort. This is perfect for beginners who want to dip their toes into investing without the complexities. Number 4. Peer-to-peer lending. Finally, consider peer-to-peer lending platforms like Lending Club. With as little as $25, you can fund loans for individuals or small businesses. If you invest your $100, you could even fund several loans at once. This option carries risk, but it also offers potential returns higher than traditional savings accounts. Investing $1,000. Now let's step it up to $1,000. With this amount, you have more options to create a solid foundation for your investment journey. Number 1. Index funds or ETFs. One of the best ways to invest this amount is through index funds or exchange-traded funds, or ETFs. For instance, consider investing in an ETF like Vanguard Total Stock Market, ETF, also known as VTI. It provides exposure to the entire U.S. stock market and has low fees. By investing $1,000, you gain ownership of a broad range of companies and reduce your risk through diversification. Number 2. Investing in yourself. You could also invest in yourself. If you have a skill or passion, consider taking an online course through platforms like Udemy or Coursera. For example, a course in digital marketing could help you land a higher-paying job or launch your own business. Investing in education can yield returns far greater than traditional investments. Number 3. Real estate crowdfunding. Another exciting option is real estate crowdfunding platforms like Fundrise or Realty Mogul. With just $1,000, you can invest in commercial or residential real estate projects. These platforms allow you to earn returns through rental income and property appreciation. For example, Fundrise offers a diversified portfolio of real estate projects that can generate returns of 8 to 12% annually. Number 4. High-interest debt payoff. While not a traditional investment, using your $1,000 to pay off high-interest debt can yield significant returns. For instance, if you have credit card debt with a 20% interest rate, paying off $1,000 could save you hundreds in interest over time. This approach provides a guaranteed return equivalent to the interest rate on your debt. Investing $10,000. All right, let's get to the big leagues. $10,000. With this sum, you can really start diversifying your portfolio and making some significant moves. Number 1. Brokerage account. Open a brokerage account with a reputable firm like Charles Schwab or Fidelity. Consider a mix of stocks and bonds. For instance, you might allocate 70% to a diversified stock portfolio, like a combination of ETFs, tracking the S&P 500, and international markets, and 30% to bonds for stability. This balanced approach helps protect your investments while allowing for growth. Number 2. Real estate investment. If real estate has been on your mind, consider using your $10,000 as a down payment on a rental property. Depending on your location, this could get you into the real estate market. For example, if you're in an area where homes cost around $100,000, a $10,000 down payment could secure a property that generates monthly rental income, providing cash flow and potential appreciation over time. Number 3. Retirement accounts. Don't forget about retirement accounts. If you haven't maxed out your IRA or 401k contributions, this is a smart move. In 2024, the IRA contribution limit is $6,500, and for those over 50, it's $7,500. By contributing your $10,000 to a retirement account, you not only save for the future, but you also take advantage of tax benefits. For instance, if you invest in a traditional IRA, your contributions may be tax deductible. Number 4. Alternative investments. Lastly, think about alternative investments like cryptocurrency or peer-to-peer lending. With $10,000, you could allocate a portion to cryptocurrencies like Bitcoin or Ethereum. While volatile, cryptocurrencies have shown significant growth over the past decade. Alternatively, you could invest in small businesses like equity crowdfunding platforms like Seed Invest, which allows you to support startups while potentially earning high returns. Now that you know your options, how do you choose the right one? Here are a few questions to ask yourself. Number 1. What are your financial goals? Are you looking for short-term gains or long-term growth? Your goals will influence your investment choices. For instance, if you're saving for a home in the next few years, you might prioritize safer investments. Number 2. What's your risk tolerance? Are you a risk taker or someone who prefers the safety of guaranteed returns? Understanding this will help you decide between stocks, bonds, or other options. If you're comfortable with risk, you might lean towards stocks and alternative investments. Number 3. How much time can you commit? Do you want to be hands-on with your investments, or are you looking for a more passive approach? This will guide you toward active or passive investment strategies. If you're busy, consider options like robo-advisors or index funds that require minimal management. Before we wrap it up, let's talk about some common mistakes to avoid when investing. Number 1. Timing the market. Trying to time the market is a slippery slope. Instead, focus on a long-term strategy and dollar cost averaging, investing a fixed amount regularly, regardless of market conditions. Number 2. Ignoring fees. Watch out for hidden fees in investment accounts. These can eat into your returns over time. Always read the fine print and compare fees between different investment platforms. Number 3. Lack of diversification. Don't put all your eggs in one basket. Spread your investments across various asset classes to minimize risk. A well-diversified portfolio can help you weather market downturns. Number 4. Not doing your research. Always do your homework. Understanding what you're investing in is crucial to making informed decisions. Read books, listen to podcasts, and follow reputable financial news sources to stay informed. All right, MoneyWise investors, to sum it all up, whether you're starting with $100, $1,000, or $10,000, the key is to take action. Start small, stay consistent, and continue learning along the way. Your financial future is in your hands, and every little bit counts. If you found this video helpful, don't forget to give it a thumbs up, subscribe, and hit the notification bell so you never miss out on our financial tips. Comment below with your investment experiences or any questions you have. And let's keep the conversation going. Thanks for watching, and remember, financial freedom is a journey, not a destination. See you in the next video. Until next time, stay MoneyWise.